Alright, for this video I want to go over a sample form 709, which is a U.S. gift and GST tax return, and this is going to be for the 2023 tax year. Now, we have the full 709 here for 2023, so we'll go through all the pages. We've also got the form 709 instructions for 2023, so we'll cover the tables within these as well. And then we have a copy of the taxpayer's 2021 Form 709, which we need to pull through some information for the current period. We've also got an Excel workbook here, which is the recalculation of the credit allowable for prior periods. So we'll cover this as well and why this is important. And then lastly, we've got one slide here covering some background on the 709 and the fact pattern. And then we'll get into the return itself. So in this example, we want to cover one of the most basic returns, which is just a cash gift to a non-skip person. All right, so this is about as basic as it can get with these 709s. Obviously, these get much more complicated depending on the circumstances. But for this initial video, I want to do this kind of example. I'll have other videos covering more complex ones later. So the 709 is filed to report taxable gifts, so that's federal gift tax or the GST amounts. And generally, the type of individual that needs to file this is, it's first an individual, so businesses don't file these. And they're filed by U.S. citizens or U.S. residents that make taxable gifts during the year. So if your gift amount exceeds the annual exclusion per donee, you generally have a taxable gift. You also need to file these if you have gifts of future interest, even though those future interests, the valuation might not exceed the annual exclusion. So really important to look at what type of property are you gifting, what are the circumstances, and that'll determine whether or not you need to file it. Now, what kind of gifts are not subject to the gift tax? Well, that's contributions to tax-exempt organizations, so non-for-profits, 501c3s. If you make gifts on behalf of somebody directly to an educational institution to cover education expenses, those are generally exempt. Same goes for medical costs, or if you're making contributions to a political organization. Now, with the gift tax, generally the recipient is not the one liable for reporting or paying the tax. It's the donor that has to do all of this, right? So that's quite a common misconception, is that people, when they receive a gift, if it's truly a gift, they think that they have to pay tax on it, and that's not the case, right? If the donor is the one gifting the property to you, that person is responsible for reporting it and paying the applicable gift tax, if any. All right. Now, different rules apply for gifts between U.S. and non-U.S. persons, right? So, for example, when a U.S. person receives gifts from non-residents that exceed $100K, that person has to file a 3520 to report the gift and pay any tax if applicable. But the general rule is this first bullet point here, right? The recipient is not the one having to do anything here, it's the donor. Now, the annual gift tax exclusion changes from year to year. For 2023, it's $17,000 per donor per recipient. And so the amounts increased to $18,000 for 2024. And they were previously $16K for last year, so 2022. All right, so let's have a look at the fact pattern, and then we'll get into the return. So in this fact pattern, we have Jane, taxpayer. She's a single filing taxpayer, never been married, and she has one son, Adam. And in 2023, Jane made a cash gift to Adam of $19K. She's previously made a cash gift of $16,000 in 2021, and she did report that and file a Form 709 for 2021. Now, there were no other gifts in any other years, including 2022, last year. Jane has filed a extension request for a Form 1040, and so that 4868 extension request will also apply to the 709. Now, before we get into the return, some really important things to highlight, which is what's not being covered here. So the first one is that Jane, never being married, is not going to have this DSU issue. So deceased spousal unused exclusion can apply in cases where you're filing and you have a deceased spouse. She's never been married, so not applicable to her. The other thing is the 709 reporting gets substantially more complicated when you have transfers of non-cash property, if you have any kind of valuation discounts, transfers to trusts, skip persons, GST issues, all of this comes into play, E-tip issues. So it's really important to remember that this is a very, very straightforward, simple example where we just have a cash gift to a non-skip person. All right, so let's have a look at the return. So we're starting with 2023. We've got Jane's information here. So first name, last, address, Social Security number. Box 5 is her legal residence, so county and state, so Sarasota County, Florida. Box 7, she is a citizen of the United States of America. On lines 8, we've left this blank because she's not deceased. She's still alive at the end of the year. And she did file an extension, so we've checked that box. Line 10, so the amount of donees on Schedule A. In this case, we're just going to have one donee, right? We have her son, so we were just going to have one person that received a gift during the year. Line 11A, we've marked that as yes, right? Because she has previously filed a 709. And then line 11B, we've marked no because her address is the same as the previously filed 709, so there's no need to update there. Now, line 12 we've marked as no because she's unmarried. Lines 12 through 18 would be applicable if you wanted to split gifts with your spouse, but in our case, it doesn't apply to us, so we've skipped over those items down to line 19. And line 19 we've also marked as no because we don't have any DSU amounts that need to be accounted for. So in part 2, the tax computation, with starting lines 1 and 2, we need to pull these amounts from other schedules on the return. So we'll start with Schedule A, where we have the computation of taxable gifts. So Schedule A is broken out into a number of parts. The first part are where we report gifts that are only subject to the gift tax. And so that's what we're going to be working with here. Part 2 are gifts that are direct skips and have both gift tax and GST tax issues. And then lastly, in Part 3, we have indirect skips and other transfers. So these are transfers to trusts or transfers to trusts that are currently subject to gift tax and might be subject to GST later. All right, so we got just Schedule A Part 1 here for our cash gift to a non-skip person. So Adam, taxpayer, we put his name, mailing address, the relationship he has, the donor, and the description of the property that was gifted to him. In item F, the value of the cash on the date of gift was exactly what the amount of cash was, right? So cash is cash, and then the basis for the donor is also the same number, right? So if you contribute a non-cash property, then you might have a variance between the value and the basis, right? That's often the case, but in this case, just cash, so the values are the same. Date of the gift was on December 1st, 2023, and because we don't have a split gift issue, column H is simply the same amount for $19,000. Now, once all of the gifts are reported up in Part 1, we can go down to Part 4 where we have the taxable gift reconciliation. Line 1, we are adding up the total value of all the gifts of the donor. So we're going back up to page 2, and we're looking at columns H for parts 1, 2, and 3. Well, parts 2 and 3, we have nothing completed here because they weren't applicable. So we just have part 1, column H. We have the $19,000 figure for the gift to Adam. So on line 1, in part 4, we have $19,000. Line 2, we report the total annual exclusions for each of the gifts, right? So in this case, we have just one gift to one donee, and so the gift tax exclusion for the 2023 year is $17,000. So we've reported $17,000, right? This is going to vary depending on what year you're doing this, and then also how many gifts you have reported up above. So in this case, we just got one, and it's for the 2023 year, no split gifts, no future interest, nothing unique like that. So we just had the $17,000. So the total includable gifts is the difference, which is $2,000. So this is in effect the taxable amount of the gift for the year. Now on the deduction side, we don't have any marital deduction or other exclusions. The charitable deduction you might have if you've also reported a contribution to a charity up here. Remember, charitable contributions aren't taxable gifts, but if you have to file a 709 for reasons such as this, and then you also made a charitable contribution, you have to report the charitable contribution up here, but then you report the same amount down here on line 7 to reverse it out. So you have to report it even though it's not going to be actually subject to any kind of gift tax. We don't have any GST on line 10, so the taxable gifts is simply $2,000, and that's reported back up here on page 1, line 1. Now that we have line 1 completed, we can go to Schedule B to pull through the taxable gifts from the prior year. So if I go down to Schedule B, this is where we report gifts from prior periods. All right. So you list out the total gifts on a per year basis. So the only other year that we had to file this was 2021. The office of the IRS where you submitted the return, and then in column E, the amount of taxable gifts from that year. If we have a look at the return, you can see here the taxable gifts from the current period are $1,000. Right, this was the amount of the $16,000 over the $15,000 exclusion for the 2021 tax year. Now, the applicable credit on this amount we'll see is $180, and that's because within that tax bracket, $0 to $10,000 for this year was subject to just an 18% tax rate. So we had 1,000 times 18% gives us $180. Now, if you pull through these two amounts, really important to remember for the Schedule B, if the total amount of gifts is under $500,000, you can pull through the credits in column C just like we did. Right? You just report the credits as they were taken on those prior year returns. If the total gifts exceeds $500,000, you've got to do a bit more work. So if we have a look at the 2023 instructions and look at the gifts from prior periods, the column C computation here, notice here that it says if your prior gifts are totaling $500,000 or less, in column C you can enter the amount of applicable credit that was actually applied in the prior period. Right? So we can use the amount, the $180 that was applied in the prior period. If you have prior gifts totaling over $500,000, you have to recalculate the credit amount using these worksheets. So redetermining the applicable credit for gifts in excess of $500,000, use the worksheet for Schedule B, column C, credit for allowable prior periods. So this is the workbook that you can use, and they have a table and a legend up here that shows you what each item is per column. And so we've put together this schedule just for illustration purposes, but it wasn't necessary. But in effect, what you're doing is you're reconciling those prior taxable gifts with the changes in the applicable exclusion amounts and the applicable credit amounts, right? So in our case, we didn't have to do any of these revaluations because we have less than $500,000 worth of gifts, so we could have just pulled through the numbers as we had them reported on the prior year return. So once we have these values pulled together, on line 3 here, we have the total amount of taxable gifts for prior periods, add the amounts on line 1, column E, and an amount, if any, on line 2, and then enter here and on page 1, part 2, line 2. So that $1,000 amount flows back up here to part 2, tax computation, line 1. So we've got $2,000 of current year taxable gifts, $1,000 in prior year, so the total taxable gifts is $3,000. Now on lines 4 and 5, what we're doing is we're using the current year tax tables to calculate the amount of tax on the total taxable gifts and the amount of tax on the prior year gifts. So if we have a look at the tables, this is the tax rate table for the 2023 year. So if we start on the left-hand side here, notice at the top, column A, if your taxable amount is over zero, so $0 to $10,000, the amount of tax calculated is 0 plus 18% of the amount over zero. So in other words, if your taxable amount is between 0 and 10 grand, it's 18% of that value. So when we look at the calculation for these periods, we have $3,000 times 18% gives us $540. On line 2, with our $1,000 figure, we have $1,000 times 18% gives us $180,000. So the balance here is $540 minus $180, $360. This is effectively the amount of tax that applies to the current year taxable gifts, right? So 18% times $2,000. Now, moving on to the applicable credit amount. So if you have a DSU or a restored exclusion amount, you calculate this a little differently. But in this case, we have neither. So you can simply enter the applicable credit amount for that current year. So if we have a look at the instructions here, we'll go to the exclusion and credit amounts. So we have the exclusion amounts here on the left-hand column, and then the credit amounts on the far right. So if we go to 2023, the credit amount, $5,113,800. This is the value that we're reporting in that line item on page 1. So we go back to the tax return instructions. We input $5,113,800 on line 7. And then on line 8, we're entering the applicable credit that was used for the prior periods. So if we go back to Schedule B, line 1, column C, so we have Schedule B, line 1, column C is the amount of credit that was already applied in the prior years. So $180 is reported on line 8. We subtract $180 from the line 7 amount, and we're left with $5,113,620. Now, in effect, what's really happening here? What we're saying now is we have $5,113,620 of available tax left before we actually have to start writing a check to the IRS. So as long as the balance is less than this total, we have to track the amount of credit used, sure, but we're not actually going to be paying any gift tax yet. And so you'll notice that down here on lines 17 through 20, the balance owed to the IRS is nothing. So the applicable credit amount for this on line 12 is the smaller of line 6 or line 11. Well, the smaller is line 6, so we put $360 down there. We don't have any credits being applied for foreign gift taxes. That often happens when you're an expat and you live abroad, or you're a non-resident but you have U.S. site as property. So 0 for us doesn't apply here. And so the difference, the total credit that we're going to be claiming, add lines 12 and 13, and we've got $360. Now, in line 15, we're subtracting line 14 from line 6, and we're left with 0. Right? No GST applies. Total tax on line 17, we're adding 15 and 16. Total amount of tax owed for this year on federal gift tax and GST tax is 0. So we're not having to pay anything, right? So the takeaway here is just because you have what's considered a taxable gift and you have to file the Form 709 does not necessarily mean you're actually writing a check for cash to pay those gift taxes yet. You have to file the return to track the amount of applicable credits that you're using each year, right, on a cumulative basis. All right, so that covers it for this return. I hope that was helpful. Any questions, feel free to leave a comment below. Like I said, I'm going to be posting some other videos that are going to cover some different scenarios, so go check those out also when they get posted. And as always, I appreciate you watching, and I look forward to seeing you on the next one. Thank you.